Everybody, good morning. Good morning. Good morning. Looks like Goose in the house. Jan, Rosalind, Dan, Ed, welcome to the show, all my channel members. And as a reminder, you got some extra emojis if you're a channel member. And Rex, Sergio, Ted, good to see you. Frank, Arturo, Dave, General Rush, good to see you. Kay, good to see everybody. And if you want to be a channel member, click the link down below to become a member. And if you just want to chat while I'm live, click the link over here. Be a subscriber on the channel. A few seconds later, chat is enabled. Hangover to happiness, good to see you. And how about this reverse repo thing? Anybody know about that? Anybody been hearing about that at all? Maybe? And something crashed on my computer. I do apologize. Before I went live, something crashed and it is causing chaos. I can't share the screen at the moment. Let's see. Oh no. Let me see if I can restart something. Restart. See if I can do it. There we go. Let's see if this will work. All right. Set as default. No. All trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. If you desire personal financial advice, you need to hire and consult a financial advisor. So basically, I make predictions, right? They may never come true again. I may get it wrong from now forever. That would kind of suck, but that's the reality of it. Nothing works forever. Now, you shouldn't trade stocks, options, bonds, forex, futures, cryptos, treasuries. Shouldn't long them, shouldn't short them, shouldn't trade them. You may lose money. I mean, there's substantial risk of loss. And if you just need somebody to tell you what to do, that's not what I do. You're going to have to hire and consult a financial advisor. Now, that all said, check this out right here. And we have former Fed. What the heck's going on? Now my phone's being all crazy. And restart those. And right here, this is a problem. This is what the problem is. They shrunk the reverse repo like $23 billion in like 2 days. And then we had a liquidity crunch right here. And we're projected to keep shaving that reverse repo balance down to back near zero. All right. And reserve balances, as the repo drops, reserve balances are dropping, which creates a liquidity problem. See right there, the BTFP use dropped $26 billion in the first half of September. Dun, 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 dun. That's that bank funding, the temporary bank funding program. We're seeing bank liquidity. Well, I mean, it's coming to an end, right? Like they ended it back in March, and like as banks get to the end of it, they gotta pay it off and get it out. GTFO. And the reverse repo here. And we're just seeing all sorts of interesting kind of problems. See, we went from over $1 trillion in the reverse repo. Now we're down here. In September, we kind of dropped down to almost $200 billion. We spiked back up. That was kind of a little crunch there coming into October. And then we're dropping back off. We may hit a low here. And what does this do? This creates a shortage of cash at banks. All right. And this is the same situation where we had problems. We had a liquidity crunch back in March of 23, and that caused several banks to go under. And we're nearing what might be called the lowest comfortable level of reserves, and a point where the market freezes up and the Fed panics. Generally, something horrible happens. Silicon Valley Bank was the last one, was a little hiccup, but Lehman Brothers and all that stuff was the big one that happened back in 2008. This is the same sort of situation that we're setting up right here. All right. Same situation we're setting up. Eerily similar. to 2008. Eerily similar. So these are something I'm kind of keeping an eye on here. Now, does this mean it's gonna come apart tomorrow? Probably not. Come apart next week? Probably not. Come apart next month? Well, now we're talking maybe. Especially if the Fed tinkers with the rates. That's coming up in a couple weeks. And then it's all interesting here. Like, there's a lot in this article right here. There's a lot here. And you see the lowest comfortable level of liquidity is around 3 to 3.25 trillion for banks. That's just to keep everything greased. But if we start dropping below that, things freeze up. That's where banks can't meet their overnight obligations and things blow out. All right. It's another risk sitting here in the market as they pull all this money out. And the Fed runs the reverse repo, but the Treasury has to be able to sell their debt. So what could this cause? It could cause Treasury auctions to spike to insane levels. All right, levels we just don't see. And then if they can't sell their debt, this is kind of like what I was speculating before. Like, I've kind of talked about this for a lead up into this a long time. Is like, what if we have some insolvency? Yeah, I was speculating, Japan, like if that money dries up, what happens if nobody's buying the debt? What happens is that when they auction, when they do so a Treasury auction for T-bills and stuff is different than you might think. Like when you go to an auction, you're like, or when you go to eBay, you're paying more money for whatever it is you're trying to get. Now, when the Fed does, or when the Treasury does an auction, they're trying to auction off these things at as low an interest rate as they possibly can to sell them off. But people go higher on the interest rates, and it costs the Treasury more money to sell those bills. All right. So when they do their auction and it comes in bad, that means interest rates shot up on their auction. If the money freezes up, there's nobody to buy the Treasury bills. The rates go, and that means the debt explodes higher. We just saw in the last 3 weeks the debt exploding over $400 billion. Almost, we're close to $500 billion in 3 weeks. And they were talking about every 100 days. Well, 3 weeks. I don't know about you. 3 weeks is 21 days. If we got halfway to $1 trillion in 21 days, that doesn't sound like things are going so swell. Right? So this is something to keep in mind as we're moving forward here. 3 fundamental keys right here: cash, collateral, and dealer sheet capacity. Now, how do you watch these things? You got to get these trade reports, and that's why you follow me. I tend to go digging for these almost every day and see where we're at. They don't come out every day, so this is one of those interesting things. So right here, so we're looking at this maybe coming ahead at the end of the year. That's when the quarter end is. All right. So, like I said, maybe as soon as next month, but maybe as we reach the end of the year. And was funny enough, not even related to this conversation at all. I was having a conversation right before I went live, and the guy I was talking to was like, gosh, these charts are setting up just like 2021. He's doing a totally different thing. He's not like a necessarily a trader. He works with a lot of other gurus. He was just like, golly, these charts are setting up like 2021. The end of 21, where we went down the toilet in 22. So, Goose has said that a bunch of times. Now this is crash material. This is not inflation material. This is a liquidity crisis, banks blowing out. This is like 2008 financial crisis situation. Probably worse than Silicon Valley Bank. I think they kicked the can down the road with the emergency lending facility, and it could get a lot worse this time. All right. So, dun, 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 dun. Inflation is just long term hurts. This is like flush the market out, flush the toilet, and we could drop pretty quickly, and it could spill over for years. Like this, the fallout on this one could be a lot bigger. Like in 2008, they kicked the can down the road. They patched everything up. They, too big to fail. We bailed out stuff. We didn't flush it out completely. So all of that's still out there, actually. Nothing actually got fixed. Oh, we put in tougher rules and this, that, and the other, and it all got kicked down the road. One of these days, we're going to have to flush it out. And that's why it's another, like you've heard me talk about this. Like there's pros and cons. Like you had the positive things in the market, the negative things in the market. The negative things are starting to outweigh the positive right now for when you look out for the next decade or two. And we could experience a big flush out. So it's not just macroeconomic things or microeconomic things. It's chart patterns. There's a lot stacking up here. And it might bring some pain. Might bring the pain. So we're seeing a little bit of bright spot here today, though. Core durable goods came in positive. Durable goods orders. Not sure how negative 0.8 is good, but hey, there you go. I guess negative 0.8 was better than negative 1.1. So there you go. There you go. We're seeing some volatility in this number, which not the greatest thing to see. When the volatility in this number starts spiking up, like right in here, as we came into 2018, we had a rates freak out in 2018-19 here that led into COVID. And back over here, you can see it as it was through a calm period, and then we started expanding, and then look what date it is. Then we went through a calm period, then we started expanding, and we got a crazy move in there. So I just look at the trends. Now, coming up at 10 o'clock here in about 30 minutes, we've got revised consumer sentiment and some inflation expectations from University of Michigan. And we'll see what happens there. Don't expect a lot. We got the world over the next couple weekends goes through daylight savings shift. So if you are not in the U.S., we don't shift until the first weekend in November. So a lot of people shifting this weekend, the U.S. shifting next weekend. Just keep that in mind when you're trying to schedule my show. And coming up next week, we got a lot of big tech earnings, but we have JOLTS jobs coming up on Tuesday. We've got advanced GDP coming up on Wednesday. Got pending home sales and crude oil inventory there too. And then Thursday, we've got PCE right there, Powell's favorite number, unemployment claims, all that good stuff. Non-farm employment change, unemployment rate on Friday, right there. So this is it's looking kind of spicy coming into next week, especially with all the big tech earnings. We have like Microsoft, Google, Amazon, Apple, and Meta all reporting earnings next week, I think it is. I don't have a fancy chart yet. We're still on this week. Earnings Whispers haven't put out the chart for next week yet. So this week, here we are wrapping up. We had these few things this morning. Like we had Rubbermaid and trucking and Wisdom Tree, Piper Sandler, and Colgate Palmolive. So we're seeing some stuff moving around. Texas Roadhouse in here after the close yesterday. And how about Tesla, though? My goodness, yesterday made the second biggest move on record for a single day on Tesla. Despite the Robo event being kind of meh, yesterday was rocking and rolling. And despite the little bump down today, we're set to go up. All right, this is that just the most basic pattern, my roadmap balance pattern right here. Right there, bounced off the roadmap line. Boom. Yesterday was the activation. Today you got a little chance to get in a little lower. Target, high probability target right there, 273. Now, that's just the roadmap line bounce. All right. If you're interested in the roadmap line, you can click the link for my channel right down below. Go get my favorite indicator. That video that plays on my channel homepage, that's the roadmap line. All right. I kind of explain how it is and what it works and how you can make it on your own. And if you're like, I'm not a technical person, I'm not a DIYer, I just want an easy button, link is in the description. It does cost $5 if I do it for you. So that's available right there too. Plus I give you some other goodies, weekly watch list and a weekly video on the setups and stuff like that too. So you give me some money, I give you more stuff. And that's the way it works. So right there, looking for this, you may be like, well, that's not very much. Yeah, well, we talked about it right here. We did that pros and cons. What are the things positive? What are the things negative? I said the positives kind of outweigh the negatives, and I held on to my position in TSLL. I was, and I am still long Tesla via Tesla shares and via TSLL, and I still expect this to go higher. And that's not all. That's not all. We have a potential to rally on up here to the 350 area, right up in here. That's been a target for a while, right in that area. And then above that, long term, this may take I'm thinking it may take a year or two, possibly. Could be well into next year, could be later than that. 500, could be next year, could be the year after. I don't know. 26, 27, 28, 29. I do expect 500 before we break below 100. I think this was the low. I don't think we're going to break below 100 again before we get to 500. All right. Dun, 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 dun. You're making PTJ mistake in YT vid. Paul Tudor Jones says all roads lead to this because U.S. and central banks have to keep U.S. fiat currency Ponzi scheme going. Hey, it's one of those things. They're addicted to liquidity or addicted to dollars and inflation. Now, there's one clear solution to the debt problem, and there's only one. One clear solution that the government knows how to do. That's create inflation to inflate the debt away. Now, the other solution is drastic and it's going to hurt, is to cut all the spending. And I'm not just talking like get it back to balanced. I'm talking about cut the spending. We're talking no Social Security, no Medicare, no education, no, very little, basically back to defense. And that's about it. Defense and transportation, maybe. I mean, I don't think we can do it. Unless it blows out, I don't think we can do that. So there's only one real solution: inflating the debt away. And I've shown that chart many, many times. So if you haven't been here before, let me go hunting for it really quickly. It's right here. We're probably going to stay on this path. This was back in, let's see, that started in May 2020. So this was 2022, 2023 right here. Now we're in 2024. So we're up here. We have potentially another decade to go of this inflation. And it may dwarf what we saw in the 70s. And this is just repeating what we saw in the 70s right here. And so we're actually sitting right here now. This could rock and roll. We can see prices 150+% higher than they were during the end, right after the end of the main COVID situation. How do we take care of the debt? And this is the scenario where everything gets, with that much inflation coming in, and it may dwarf this. It may go way on up. With that kind of move, that's where enough money comes into the system where everything can get more expensive in dollar terms. All right, I talk about the law of big numbers. Like these stocks right here can't move giant because there's just not $3.5 trillion of liquidity to double the price of Apple. Because if you do that, you're going to have to double the price of Microsoft and double the price of NVIDIA and double the price of Google and double the price of Amazon. Like you're going to have to, so that gets to be a substantial chunk of money that has to come into the economy. The only way to do that, giant size, outsized inflation. Dollars go in the toilet. The value of dollars go in the toilet. And that's why these companies rocket higher. And we're not talking $9 a loaf of bread. We're probably talking $90 a loaf of bread. Yeah, imagine Apple worth $34 trillion and Microsoft worth $31 trillion and NVIDIA worth $28 trillion. Yep. Kind of like Argentina, except we're the gold standard. So imagine what the rest of the world's going to feel. It'll be kind of... And the problem is, when you look at it, like, how do we get there? Like, that's, like I said, and if the challenger wins and they cut government spending, really cut government spending, not just pretend like they're cutting government spending, I don't know. I think it can, it's like a heroin addict, you cut off the supply and they do crazy stuff. So we'll see what happens. Or, it's double bad. You keep spending more, we're on the inflation train. You cut government spending, we're going to have fits. Like, it's going to be rough. Be cutting off the addicts. So, ES, potentially breaking higher. Beautiful potential setup. We got the downside. Let's just remove the drawings at this point. Focus on. So, Term Art Trading Lab, we had a couple meetups. I've said, where is the low? On this chart, the low is right here that we're focused on, right there. We moved up. We retraced, measured bounce. One of the two patterns I follow. Roadmap line bounce, one of the patterns. Measured bounce, the other pattern. This is a almost perfect measured bounce. If we're bearish and we're going to go down further, we'll stop in this vicinity right here. If we're bullish and going to continue up, likely to come up in this vicinity right here. You notice there's an overlap zone that creates a little uncertainty where we could go down or up. So stopping at the 1272 is a little bit of a coin flip right here in that zone right there. A little bit of a coin flip between being bullish and bearish. So right now we have this move up. That's move 1. Got this correction. That's move 2. And we're working on this move right here. That's move 3. We need move 3 to come up here to resume the bull trend. If we stop here, we may go lower And we'll probably go lower than this low over here. This is how I kind of predict where we're going in the markets. All right. Wonder how I get lucky. How do I know where we're going? There you go. All right. Hopefully it's clear what we're talking about. There's the first move, the second move, and the third move. All right. So when I pull this up and I'll look at it, I'm like, that's 3 moves. All right. Now, zooming on up a little bit. You see what else is 3 moves, right? Right here. See this one, and that one. So far, it's just 3 moves. Running the fib line off that, up to there, down to there. We're getting into that zone. Let's move this one off so we don't get confused. We're getting into the bearish zone. And then this is the bullish zone. We tend, or, I say bullish. If we're doing this upside down, it would be, flip everything over. But this is, really, I mean, this is corrective. Like if we stop here, it's corrective, which means we get continuation of the trend. This correcting the trend. The trend has been, the bigger trend is down for the last several days. So if this is a correction of that trend, we're going down. If this comes up here, this is looking more like constructive for an impulse. Impulse would, in this case, if we're indicating an impulse and we're going up, that means it's a new trend up and we may be done with the correction over here. I know it's confusing, but you start doing this enough. I did this for years before it really clicked. All right. Keep following me. Keep coming back. Right here. Another 3 wave. That was a correction. So this is starting to look like, and the thing where it gets muddy though is this looks like 3 waves. So that's 3 up, 3 down. And 1, 2, 3, 4, 5. Possibly topping out. We're stopping here. Gives me a little heartburn. If we break that back below the roadmap line, we may go lower low. Right there. All right, these are little nuances to it. Now, I always say, do you want to be an analyst or do you want to make money? So I sit here. I spent years. I spent 4 years being an analyst, trying to analyze where I'd pull up this chart and be like, I want to know where it's going next. And I'd sit here and try to figure it out, I get it wrong, try to figure it out, get it right, try to figure it out, get it wrong, get my butt slapped, handed to me, and by the market. And then I started getting it right more often than I get it wrong. I still get it wrong plenty of times. And then, you know what? I figured out there's 2 patterns when they show up. I can get it right more than I get it wrong. Pattern number 1, the roadmap line bounce. See this was roadmap bounce from below. We came down. We didn't get through the 618. We did, but only one candle. All right, that stopped right in the vicinity, and then we reversed. So that looks good. If we had gotten the close below that in the continuation, we were likely to go on down here. Now, that rejection of the 618 set up the other pattern, the measured bounce. So measured bounces and roadmap bounces combine together to find reversals. So when I talk about that, and you hear me say that, we gloss over it in promos and stuff like that, but those are the 2 main patterns that combine together to find high probability trades for me. And that's how I predict where we're going too. And I just want to bring up one because, a lot of people losing a little bit of faith here. Let's talk about this one a minute because I know it hurt. I was down about 20 grand yesterday, or actually I was down probably 60 grand yesterday on this position. Here was the move down, the initial move. This trend was coming down. We were trending lower. We bounced. And this is long term. Look at these. This is years. All right. We bounced. We came up to this high. Retraced. Held that 618. We now bounced up. And we hit that 618. and we bounced down yesterday. This is an important thing right here. This was in my plan, all right, that we were still below the 618. I had that heavy line on there since back here in February, probably, that we were going to, I had this one over here. We break above it. We're likely to go on up here, test the 618. It looked like we could get above it. And then we got slammed, and we're coming right down to test. We've tested the daily roadmap line. We've got the 3-day roadmap line just below us. And then the weekly, I believe it's right in that vicinity also. Right there too. Yep. So we're going to test this weekly and 3-day roadmap line. That's what we're doing right now. All right. How do we know we're wrong? We get down to this orange zone down here where we did this last consolidation. Don't really want to see that happen. First initial warning is dipping below this 45 level. Then things are looking a little sketchy. All right. Don't really want to see that. It might spike down though. We could spike and reverse. Remember what chart we're looking at. Spike and reverse on a weekly chart is just a week we get a close down there. So if you're playing on the daily chart, but trading something that's on the daily or weekly or even monthly chart, you got to keep in mind your time frame, all right? Keep in mind your time frame. And we may go retest the monthly right there. We may dip below that, tap that monthly roadmap line before we can go higher. There's the target. We're just barely started on this thing. Look at my time frame though. And that's just my best guess based on the prior move. We were going a little faster. May slow down. All right. I know a few people really concerned about NEM. So there's kind of what I'm looking for. I'm looking for this to come up in this area. Maybe up into the 70s here. And then we get another retrace. Possibly breaking on out from there. We'll see. This over here will kind of set up whether we're going up here or we break down and do something else. All right. That we're talking long duration here. If you're playing the short term with me, you got to keep time frame in mind. This was not a short-term opportunity for me. This is a long-term opportunity. Do I like seeing it do that? Well, as I told my Termite Trading Lab group, it's better that this dropped in 1 day, basically 2 days, than it is that this drug out for 3 months. Like if this had drug out for 3 months, it would have just been sucky. Right? If this is drug out to January or February, that would have sucked. Just like, ugh, this thing's never going to work again. But flashing down in like a day or two, now we can build some upward progress here. Break back through this consolidation, set us up for moving on up. Now, the other thing that may happen here, another one to keep an eye on. That low, that high. There is support right down there at 38. Is it better to book here and get back in here? Well, this is never guaranteed. It could bounce here. Of course, you could have to sit through this. And if we break through that, odds are the pattern is done. We're not doing it, and game over. So there you go. In Q, this is looking pretty spicy for the breakout right here. There you go. We could break and run. That'd be pretty healthy. Russell, not really participating. Watch for the resistance here and the turn down. CL, just consolidating. This is really interesting here. Are we finishing that head and shoulders? Quite possibly. GC, consolidating high. Bitcoin, trying, making a second attempt at breaking through the downtrend line. Ethereum, right here, tapped, retraced. We hold that uptrend of lows. Holding the uptrend of lows so far. That can lead to a pop up here at 33.50. I did add small add to ETHU just because it looked like it might be set for a breakout. But when you look at this chart, that's a watermelon seed squeeze. That can break up or it can break down. Unreliable. And it could entirely possible that we just grind that till November. That's Thanksgiving time. What also lines up with Thanksgiving time? Oh, not on that chart. I wonder which chart it's on. All-time history, maybe? Maybe. There it is. This time frame right over here is when I expected, time-wise, Bitcoin to break out and go. Dollar, consolidating the resistance zone. I do kind of expect this to drop back to the roadmap line. And a primary expectation, if we break below it, we'll probably come back down here. If we break below that, we'll probably be cruising on down to the mid 90s. But of course, there can be humps and bumps and fits and things along the way. I've been expecting that zone down there for a year. And then maybe below that, we go back and look, zoom out on the dollar. You can see we've kind of hung around this 90 area. Sometimes we get a run up, sometimes we get a run down. This is a lower high. Probably get a higher low. That's all we've got to work with so far on that chart. We may just keep screwing around in this 100 area long term. You see that, right? That's a long time just to be screwing around in this area. NKD. Oh, you're welcome, David. Dun, 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 dun. You gotta decide your time frame. So that's, I have a hard time with people following me because they may be looking at, I only want to be in this trade for a week. When I'm looking at the trade, like I'm thinking about this trade for 2030. I mean, that's like 6 years. So that's why I can't give you advice a lot of times. Like, your point in life may not be my point in life, right? So if you desire personal financial advice, you got to hire and consult a financial advisor, or you got to learn how to do this stuff yourself, which is what I'm trying to help you do, so you can make your own decisions. All right. Nobody's watching out for your money but you. Nobody cares about it more than you do. I promise you. It doesn't matter who you're paying or how much you're paying them. Nobody cares about your money more than you do. If you don't care about it, they're not going to care about it. All right. They're going to give even less care about it than you do. NKD here, potential market roadmap bounce. If this bounces, potential to go up to this 40,000, 41,000 area, 40,008, 41,000. And if we can break above that, potentially up here to the 44,000, which will, if we do this and get the continuation, it's going to take the US markets higher. If we break down and break down, we'll probably come back to test that. And if we break down below that, we're probably going on down to like 24,000. 30,000 and 24,000. We do that, the US markets are going to crush. All right. Liquidity is going to flush out of the markets. Deckers Outdoors, potential roadmap bounce right there, that high, that low. Now we're going to go through what's moving today, things that are popping $2 or more, things that are dropping $2 or more. The poppers are on the gainers list, the droppers are on the decliners list, and we're looking for opportunities. All right, this one, if it closes up here, well, we already had the entry back here. If it closes up here today, secondary entry for 191. DLR, well, that's it. Targets, it was at the target yesterday, definitely exceeding targets today. Watch out for that to retrace. BAH, same chart, same deal. We were approaching target yesterday, and now we're definitely in there today. Protect your profits if you're on that one. LHX, didn't really have any opportunity here. It's exceeding targets on the small duration time frame. If we're looking bigger picture, maybe out to 25 or 26, we could be looking up to 300 here. Probably get some fits and corrections along the way. CNC. This one looks like it's still on the path, even though we got the gap up today, still on the path to come down here. That would be what I expect to happen over the coming weeks and months. Could take out to 26. WDC. This is probably going to be bullish. If we can get the close above that 618, 84, 88 potential on the upside. FNGU. And we're working on signaling that we're going to go up to 627. That's a healthy, almost 50% upside. Right up in there. TPR. Tapestry. Boom, 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 right to the target. That's the target. 53, possible above that, 59. But if you're on that one, consider protecting your profits. Like that was it. It's been a long time coming. Entry was right back here, September. Here we are. Rock and roll, rock and roll. All right, KB, getting a lot of stuff, 10 o'clock. And KB, right up through the targets, protect the profits. COF, excuse me, Capital One. I've not heard anything about their deal with acquiring DFS, but it's been all quiet on that front. They are set for a 199 target up here. SKX. Retrace to the roadmap line. If we can break back above this consolidation, these highs right here, set for 78 on the upside. Crocs. Hey. Somebody we know, Wrongimer, loves this stock, loves this company, loves it's kind of funny. And we get above that right there. Set the potential for that, and we may be looking out a ways for that to happen. It's bounced once, bounced twice. We're seeing this a lot, this parked on the roadmap line thing, and then things just get sparky. So we do have the earnings coming up next Tuesday on Crocs. UPXI, dumpster fire, reverse split right there. I can see them before I even click them. That is a nasty chart. The reverse split, that makes it a dumpster fire. Be careful. I wouldn't screw around with this stuff. CRM. Potential for that to lift off right there. Potential measured bounce. Upside targets way on up there for CRM. Like 400, 450, maybe even 500. Lulu. Good morning from California. It's probably early out there in California. 7 o'clock or something. And if we can buy, I drew this, gosh, back in August? Maybe, I think it was August. I said we'd probably come up, retest the roadmap line. We've kind of been testing it for a few days. We break through, retest, retrace, retest, and then that would be the move I want to get involved in. Potential measured bounce, and the targets are way up here at this point. 600, 680. Here we are at 300. You can buy a few shares, maybe double your money. As Goose proved yesterday in Termite Trading Lab, you can make some substantial money trading just shares. You don't have to trade options, all right? Big money doesn't always come on options. MSTR, launching on off. Sky's the limit, baby. This could be cruising. Let's talk about, 259 would be the next immediate upside right there. And if we're going to do something even spicier, possibly 400, 338, 288, 402. This one, maybe where we're heading, since I said that other target right before I deleted it. A little bit of confluence in this 260, 280 zone right there. We may spike up into that zone. If Bitcoin goes crazy, Bitcoin breaks out, this thing could go rocket ship style. Wild numbers. I mean, we could be talking 500. Ridiculous. This trades like leveraged Bitcoin, even though it's not. I don't know. Nail 3x on home builders. This is leverage stuff. Watch out for the roadmap bounce. Cold, natural gas. Let's just go look at natural gas. Potential bouncing. Break through this zone. We're cruising on up. Going to retest at least the 312 area. And probably set the odds that we're going on up to $4. If we can break out. Break through that prior high. Probably going to $4. TSM. Sitting at targets. Watch out for retrace back to the roadmap line. AVGO. Still has the target up there at 193. DQ Energy, DAQ, whatever you say that. Potential to go up here to 2930 area. I'm being silly when I said Dairy Queen. SPX at the targets. We could see an extension to 190. AMAT doing nothing. Golly, look, just nothing. This one could break down and cruise down here to 140. On. Yeah, that's the shoes, footwear. I was like, on. And retrace to the roadmap line, maybe. All right, decliners. This is sometimes where we find more opportunities than the gainers list. Funny enough, stuff that's declining, like this one, HCA, hit the roadmap line. If we can bounce, fill the gap, set up for 427, 435. CPRI. Ooh, that one got nasty. Ooh. This is why you got to be careful. Roadmap line bounce down right to the targets. We could be working on a bottom at this point. Now, here's the first move down right there. Here's the retrace. Here's the third move down right there. All right. Everybody see it? Pretty clear right there. That's it. Check the proportions on it. Yeah. Could go as low as 14. This could be it. That could have been it. Right there. So watch for this to break back through the roadmap line. Retest. And then get that continuation move. Not saying it's a great one. I'm just like, that would be what I would watch if I was interested in this one. I'm not sure the chart's the greatest chart because when we zoom out a little bit, that's kind of a downtrend. Doesn't have the roadmap line on it, but that's kind of a downtrend. All right. Even if we went to the weekly charts, the general trend is down. Be careful. Fix. Wow, look at that. That's the bubble pattern. Be what I expect on looking at the weekly chart. But it doesn't have to be the end yet. So watch for this to come back to the roadmap line after that pop and test and turn up again. UHS. Back above the 618, looking for 249, 254. Saya. Yeah, they tried to buy Michael Kors and got slammed and whatever. He's Capri's coach, and what was funny is Kimberly's like, that's one I actually know all about. But what good does it do to reject the buyout if Michael Kors is going to go out of business? You know, keep a competitor, but then the competitor goes out of business and you get to buy him out anyway. It's kind of like we prevented whoever from buying out Bed Bath & Beyond, and then they went out of business. And I mean, it's just like some of this stuff is just stupid. Oh, we don't want monopolies, but then they go out of business anyway. Saya, I guess not reporting the most awesome earnings, missing on the top, beating on the bottom. Gonna have to break up through that 533 area to go up to 660. That's just trucks. See them on the highway. THC, Tenant Healthcare. Seems like an unfortunate ticker with marijuana and everything, but 150, break above that, 174, 178. MNPR. Yeah, I wouldn't touch this. Reverse split hiding in there. I don't care what their drug is. That looks like it's nasty charts. May go bust. AN AutoNation been having a rough time. Probably in for look how staticky that chart is. Whew. My goodness. That is so this is volatility, right? Look at just the normal range is like a line that like that thick on the trend. You see it? See how thick that line is? Just to cover up all the price action. That's a lot of volatility in their price. Nice big thick line to cover it all up. So as they trend, they stay in a pretty big range. Looks like about a 30-point wide range as they trend. And this may lead to another correction, a short-term thing. Could come back on down 140, 150, and then move up again. You see it move up, retrace, move up, retrace, move up, retrace. This move right there. About the same size. That's an echo. TBBK. Look for that to find support of the roadmap line. Turn back higher. Break through the gap. Fill. And 61.62 on the upside potential. TYRA. Biotech. Not for me. TWG. That's coming back to the bottom. Mini bubble pattern. And what goes up comes right back down. Highly likely to come back to the bottom. APO. Likely to retrace and find the roadmap line somewhere over here. Boot barn. Wow. Finally. This was a wind up and a wind up and a boom. That was a 1-2, 1-2. There's the 3. Holy Nikes. Holy juice. I played this one over here. For those of you who've been with me for a number of years, I played this one back here on the first move. Made quite a bit of money. Did pretty good. on that one. Let's just clear this up. So I played that little move right there, and then we stalled out, and then got some overlap. So, but this looks like it looked kind of nasty, but that actually wave one up, wave, oh yeah, exceeding a 618. This is quite bullish. We'll probably gonna find some resistance. If we're not doing it now, we may find it on up here at 182, and then retrace and get the final move. The final move typically, if this was all wave one, typically the same size. So if we hit the roadmap line over here, maybe looking at something stalling out around 200 ultimately. Just I'm making a few guesses here on where we top out and retrace to, and then I probably wouldn't put it much past 200 before we do another big correction like this size thing on Boot Barn. Wow. Just wow. See Colgate Palmolive right back to the roadmap line. That high, this low. If we break back above this 104 area, 111, 112, and the bonus trade didn't get put on there. Stock pick for the day. Yeah, let me pull it up. Oh, I don't know why I didn't put it on there. It's one we've seen a few times. It's been volatile lately, so it keeps firing entries. Keeps firing potential entries and potential entries. Still the same setup. Potential to go to 150 hasn't really changed. Or 149. That's what we got right there. Hasn't really been trending at all. So it's just been sideways chopping. And that may result in a failure ultimately down here. So some fired off again right there. See if it can play out. And so thanks for coming, everybody. And make sure to give me a like on the video. If anything I said was beneficial, let's give the kind of bias of the day. See where we're at. Now that we got to now we got a few minutes on us. Go back. Oh, look at that. Right there. Look at that. Ciao. So we got a retrace and probably another move up to match wave one. Nice. So wave one at this point is that move. If we project, like if we get the retrace here, or we may go on up to the 272, but I would expect it to hold above this point right here. I expect it to, and it pretty much has to maintain a bullish. If we get overlap, that's no bueno. And so the bigger potential, we top out somewhere in here. We retrace to here. The next move up puts us in this vicinity right there. And that's why, this right here is why, for those of you that saw me throughout the trade yesterday, I put on a small position on XSP yesterday afternoon, talking about breaking higher over the next couple of days into early next week. This is it. That's what I was trading. But JT, why didn't you go big? I was only like 60-40 on going higher. 60-40 was good enough to put a contract on. All right. Hopefully that helps. Hopefully you understand. And hopefully we make money on that one. It looks like we're going on up to this area up here. Ciao. That'd be beautiful. All right, everybody. Have a great day. I'll be live sometime this afternoon, I guess, talking about something or other. Probably crypto. I think the Crypto Unleashed trade's going to probably come out today. And have a great day. We'll see you later. Nobody's watching out for your money but you. Stay safe out there. Your country per save, maybe your own. Don't stay wrong in the markets. That's where you lose the big money. Being wrong, that's okay. Admit you're wrong, close your position. Don't stay wrong, don't double down, don't triple down, don't quadruple down. That's where you can lose big money in the markets. Have a great day, everybody. We'll see you again soon.